Welcome back, traders. Happy to have you here today. In this short video, I will show you how to build a powerful trading strategy with the Recursive Reversal Chart Patterns Indicator. The Recursive Reversal Chart Patterns Indicator is designed to scan and highlight a few popular reversal chart patterns. Similar to other indicators in the ecosystem, this tool is built on recursive zigzags, double taps, triple taps, cup and handles, head and shoulders. However, this indicator names the patterns separately for bullish and bearish formations. So the actual names you see on the screen are double top, double bottom, triple top, triple bottom, cup and handle, inverted cup and handle, head and shoulders, inverse head and shoulders. This indicator's working concepts are simple to understand, thereby making it one of the best trading indicators beginners can use to build a consistent and reliable trading strategy in the market. To apply this indicator on the trading chart, search the keyword Recursive Reversal Chart Patterns and select the Recursive Reversal Chart Patterns Indicator EP version by He Who Must Not Be Named on the TradingView Indicator Community folder. As we can see, here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight indicators and their purpose so you can have a quick understanding of how the indicator works. To do this, we need to right-click on the indicator. Here are the parameter settings of the indicator. It's advisable to leave the default settings. The theme option gives the chart theme settings. Line and label colors are generated based on the theme settings. If a dark theme is selected, lighter colors are used, and if a light theme is selected, darker colors are used. Next is the length. Zigzag length for level 0 zigzag. By default, it's 8. Depth. Zigzag depth refers to the max number of pivots to be held for multi-level calculations. By default, it's 50. Minimum zigzag level. Minimum zigzag level to consider for pattern scanning. By default, it's 0. Note, in case of timeout, please decrease the value of the depth parameter. Having all the patterns selected on the chart may also cause timeouts and will make the chart look messy. It is better to limit 1 or 2 patterns on the chart to have a clear picture. Under the scanner section, there is the error percent. The error percent threshold used for ratio-based calculations. By default, it's 13. Shoulder start. This is the start of the shoulder ratio range, used for identifying handle, necks, and shoulders. By default, it is 0.1. Shoulder end. This is the end of the shoulder ratio range, used for identifying handle, necks, and shoulders. By default, it is 0.5. Risk adjustment percent. Additional padding on the risk, used for stop-loss calculation. These are options to use indicators as secondary confirmation to calculate divergence. If selected, the patterns are shown only if the divergence data is in line. The option is also available to plug in external indicators. These calculations are not straightforward and not easy to measure by manual inspection. This feature at present is purely experimental. Under the indicator section, the tool parameter also consists of the RSI, MFI, and OBV functionalities. This indicator helps to detect price action chart patterns on the trading chart without the need to manually construct patterns on the price chart. One of the best tools for price action and long-term traders. Also, it's a tool to help detect early possible reversal in the market. To buy with this indicator for the continuation of a bullish trend, watch out for a trending bullish market. Watch out to see the price and indicator transform to any of these listed pattern in the uptrend: double bottom, triple bottom, cup and handle, inverse head and shoulders. Next, patiently wait for a strong bullish breakout of this pattern. Great volume is essential for the bullish entry confirmation. Buy the strong bullish breakout candlestick that technically confirms the bullish chart pattern. Place stop loss at the low of the invalidation of the chart pattern in reference that leads to the bullish breakout. Ride the trend up to the next potential supply level in the market. To sell with this indicator for the continuation of a bearish trend, watch out for a trending bearish market. Watch out to see the price and indicator transform to any of these listed patterns in the downtrend: double top, triple top, inverted cup and handle, head and shoulders. Next, patiently wait for a strong bearish breakout of this pattern. Great volume is essential for the bearish entry confirmation. Sell the strong bearish breakout candlestick that technically confirms the bearish chart pattern. Place stop loss at the high of the invalidation of the chart pattern in reference that leads to the bearish breakout. Ride the trend to the next potential demand level in the market. To trade the reversal of a downtrend to an uptrend, first, patiently wait for a strong bullish breakout of the chart pattern constructed by the indicator. Next, patiently wait for a price pullback to the broken structure in the downtrend to serve as new support for the price. For example, only buy the retest of the neckline breakout in the downtrend for a reversal to an uptrend. Watch out for a strong bullish signal bar, such as the bullish pin bar or engulfing bar, for the confirmation of the pattern breakout level to prove as potential support for the reversal to an uptrend. To trade the reversal of an uptrend to a downtrend, first, patiently wait for a strong bearish breakout of the chart pattern constructed by the indicator. Next, patiently wait for a price pullback to the broken structure in the uptrend to serve as a new resistance for the price. For example, only sell the retest of the neckline breakout in the uptrend for a reversal into a downtrend.